So it looks like the Swiss National Bank is going to give a loan of 54 billion to Credit Suisse because they're in trouble. So the Swiss lender, so Credit Suisse sought to shore up its liquidity and restore investor confidence on Thursday by borrowing up to 54 billion from Switzerland's central bank, though it proved to offer only limited respite to global banking stocks. The Swiss lender is the first major global bank to be thrown an emergency lifeline since the 2008 financial crisis, and its troubles have raised serious doubts over whether central banks will be able to sustain aggressive rate hikes. However, the European Central Bank raised interest rates by 50 basis points on Thursday as flagged, stressing the resilience of the euro area banking sector while assuring it had plenty of tools to offer liquidity support if needed. The European Central Bank said it was monitoring the current market tensions closely and stands ready to respond as necessary to preserve price stability and financial stability in the euro area. So that is a very significant statement, that they're saying that they will respond if necessary, which implies that they're not going to let these banks fail, meaning they'll extend credit if necessary, like the Swiss bank did, and like the Federal Reserve has done with Silicon Valley Bank and what's the other one? Signature Bank. So that was like, so yeah, that's the thing. The thing is, they did raise 50 basis points, nevertheless, which is interesting and kind of stupid. So that makes you wonder what the U.S. central bank is going to do this upcoming FOMC. But let's get into that, because next thing is the Fed emergency loan may bring $2 trillion into the U.S. banking system, according to J.P. Morgan. $2 trillion. The U.S. banking sector is facing massive financial repercussions as the collapse of major banks like Silicon Valley Bank has disrupted the industry, while other banks are considered to be at risk. The Federal Reserve had to ease the ongoing liquidity crisis in the country, according to J.P. Morgan Chase and Co. According to J.P. Morgan, the Fed's emergency loan program is expected to bring in $2 trillion worth of funds in the U.S. banking system. Through this, the current liquidity issues might be resolved for now. After the failure of 3 lenders, U.S. authorities established the scheme earlier this month. The program was set to provide an additional source of liquidity to these institutions. Alongside, it will eliminate the need to sell securities during a crisis swiftly, because they could borrow against their securities, right? Even though their securities on the market would trade at a huge discount, they could. The Fed is basically saying they're going to allow these banks to borrow against it at face value. Free money. Although it is doubtful the large banks will use the program, they indicated that the initiative maximum utilization is expected to be close to $2 trillion. That is on par with the value of bonds owned by U.S. banks, except the 5 largest institutions elaborating the same strategist led by Nicola stated. Don't know his name. So there you go. I mean, the takeaway from this is that the banks, the Fed they're extending credit up to the value of the bonds on all these smaller banks. They're not going to let them fail. They are not going to let them fail. And then you have obviously the Swiss bank. Seems like it's not going to let Credit Suisse fail. So unlike in 2008, where they actually let Lehman go under and then bailed out all the other banks, it seems like the market is pricing in that the Fed is going to step in if need be, and they already have stepped in. So if in the future there is more of a liquidity crisis, the Fed is going to step in. So it's looking like none of these banks are going to fail. So none of these banks are going to fail, which is, I guess, bullish. So yeah, so that's why, despite all these all this horrible news, you still have upward price action in the stock and crypto markets, including Hex. So I mean that's pretty big. And I think what's interesting though is people are talking about, the big question is, what's the Fed going to do in this upcoming meeting? Everyone's saying that it's going to be that they're not going to raise rates, because raising rates will only continue to devalue the bonds on the bank's balance sheet, which would make them, more susceptible to being insolvent. So I think that's it was considered like for sure a no that this upcoming, for sure a no, not for sure. People were saying 25, but it's interesting that the ECB nevertheless raised 50. So I think, according to me, which obviously may be wrong, but it seems to me like, but also you have to, they didn't have the Silicon Valley Bank. They didn't have bank runs in Europe yet. And that was already starting to happen in the US. So if I would have to guess, I think the Fed is going to come out in the next meeting, which is in like a week or two or something. And they're going to say that we're not going to raise rates this time, but we're going to be monitoring inflation closely and ensuring price stability, blah, blah, blah. And I don't think there's going to be, they're not going to raise rates. They're going to say that they're looking closely and they're going to react based on how markets play out and based on how the CPI plays out. But with the CPI being at 6%, down another 0.4, I think and obviously the usual liquidity crisis, it's fair to say that it's very likely we're done with the rate hikes. And I don't know how long they can keep them like this. It's very possible, and I think probable, that the Fed's gonna take the foot off they're gonna take their foot off the brakes. Probably a lot earlier than anticipated. People are saying end of year. With this already happening, now they're probably gonna have to cut soon. And yeah, think about it. Like when they said they were going to raise rates and do whatever it takes to fight inflation, they were expecting unemployment to go up, and they were down to keep on raising rates despite rising unemployment. They did not expect a liquidity crisis. And it's looking like, I'm saying, like, if things keep on going on as is, there are going to be a lot of banks that are insolvent, especially considering that there's so little trust in the banking system right now. So I think the good news is that probably there's going to be a Fed pivot quicker than people think. Maybe within the next 3 to 4 months or something. 3 to 4 months, they could already start cutting it. But the bad news is that probably we're going to have above average inflation, at least for some time. But even so, I think crypto is going to moon if there's low interest rate hikes. So yeah, Hex will go to the moon, and maybe we'll get 3 to 4% inflation. But who knows? I don't know. What do you guys think? Let me know in the comment section. We have 81 billion watching. We have 81 people watching. Please hit the like and subscribe, and please go to the furufinance.com and book a free one-on-one. Join the Patreon, links in the description. Follow me on Insta, furu.finance. Yeah, the overall point is, if you're the Fed and you have to choose between the entire financial system going under, and therefore, every single business losing all their money and not being able to make payroll and not being able to sustain themselves, and everyone losing their jobs, and, people starving on the streets, or prolonged elevated inflation, I think you're going to choose prolonged elevated inflation. And I think that is what the Fed is going to choose, in my opinion, not financial advice. So Hex to the moon, maybe inflation goes 3-4% for the next couple of years. But I think inflation could still come down, because as prices go up, people spend less, and then, less spending could lead to lower inflation. So I'm not even sold that there's going to be prolonged inflation, because I think prolonged inflation is very unsustainable in a first world country. That's what I talk about. But yeah, please hit the like button, subscribe to the channel, and follow me on Instagram at furu.finance. Guys, do you have any questions about how to approach the pulsechain launch, or do you have any questions about crypto security, anything like that? Go book a free one-on-one. Links in the description with me. Schedule it on your own time. You could schedule it on your own time, at a time that's most convenient for you, and it'll be fun. And also consider becoming a Patreon, get access to my trades, my Discord group, meetings every Sunday, 12 p.m. Eastern time with the community, and discounts and many other great benefits, exclusive content, my trades, my portfolio, how I'm navigating the markets. Links in the description. Get in the Patreon. Go support my work if you can, or even if you cannot. And also follow me on Instagram at furu.finance.